And good evening, everybody. This is Michael Filigaro. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 for Tuesday, June 15th, 2021. The market did put in a lower performance today. So the market moved lower and moved to lower than I had expected in terms of the count that I had been using. So the first thing you're going to notice today is that I've taken off all the labeling. And the reason that I'm doing that is because that this dropped too far. So it kind of almost negated this being a third and this being a fourth. And I told you guys yesterday that if that were to occur, that would let me step back and take a little bit closer look. So first thing I do is take away all the labeling. And what may be happening, it doesn't change the fact that we are continuing to form a minute wave 5 advance to complete an intermediate wave, a minor wave 5, an intermediate wave 5, and a primary third wave. So all of that remains the same. It's just that how is it going to get there? And so being that it's a 5-wave structure, we have to take a careful look. It's happening at the end of a larger move, much larger move, and the market truly is just running out of steam to push and push and push and push and push. So there's a couple of things. Either we're running out of buyers and there's just nobody left who really wants to continue to buy this thing up higher without some solid footing underneath it. And right now that just doesn't exist. So what it could be for me is still a 5-wave advance, but all of the subdivisions, wave 1, 2, 3, 4, and 5, end up being 3-wave sequences. And that usually and often can happen at the very beginning of a move or the very end. And like at the beginning of a move, after we've had a severe down move and the market's starting to recover, there's a lot of doubt, a lot of questions as to whether this market is just going to continue to go lower. And that would suggest that you get all of these 3-wave patterns. So this could be wave 1. This again could be, I'm going to push it all the way out to here, wave 2. And then this is wave 3. And this is wave 4. Now, if that's the case, wave 4 will overlap wave 1, and just really can't go beyond the starting point for wave 3. And that's all we've done. We have 4,207. So we're still a good chunk away from that. But if that is what is playing out, it still fits because it's going to be a 5-wave structure. It still fits because we're still looking for higher highs right now. The only other suggestion that I would have is one that would really pretend that if this was only the absolute first wave of that minute wave 5 up, in which case it'd be like, that just doesn't fit because of the size of this versus the size of the third wave. It just doesn't fit. Doesn't mean it can't happen, just does not fit. It wouldn't be my first choice. So I'm going to go with that it's going to be a triangle. And that would suggest that wave 5 is going to be an ABC, a 5, a 3, and a 5. But all of the components in it are going to be 3 waves. It's going to be a mess. But that's what this whole thing has been here. This has actually been a mess from the top of 3. We got all this craziness in this 4th wave and the ABC and the X's and the ABC, and now we're doing it again here. So what I'm looking for right now is that we have to allow for a little bit of continued downside, but I'm kind of looking for the 200-day moving average to hold that in place and not give it up so easily. And that's what I'm hoping for. Again, cannot go below 4,207. And this would be keeping it above and then start to head up again. If indeed we have to declare that the 4258.25 top is the top of the top of the top, well, then this thing's just going to race lower, because that's how it should be introduced. That would be what I would be expecting, that we don't pause, we're not waiting, like this, but magnify it. We just like, get out of the way, we're getting out. And actually, it was a fairly steep decline, even for the S&P, from in Globex hitting 4252, and then within the first hour of trading, we're hitting a low at 4228. Now, it's a pretty big move for the S&P, and it was straight down pretty much. Okay, so tomorrow we're going to look for that to hold. If it breaks, please trade what's in front of you. Realize that we're heading lower. It's breaking below the 200-day moving average. You can then start going out to your upper time levels, the daily, and you're going to take a look at where those moving averages are. You got the 50-day at 4150. You've got the 20 at 4209. Then we've got a level at 4207. Then we have the hourly 200. So here, you put a little bit more perspective. So if it drops, then you've got your next moving average support comes at 4150. And then the 200 on the daily is way below. And we can keep going up if you need to, but that's not how we operate, basically. So right now, 4226. And then as we saw in the other one, if it starts to break, then we know maybe we have the possibility that's it. And then we've got 4209 and then 4207, and then it drops pretty quickly to 4182, I think it was. So if it holds, I'm looking for upside. I'm looking for between 4265 and 4300. That's literally going to be the zone. So we have resistance all the way up, and then I think you can get up to, I think the last resistance level is right up into 4293 to 4300. So resistance 4265, which will bring it right here at the top of the channel, create a new high, and then we have 75, then we have 93, and then 4300. That's where I'm going to leave it. Remember, trade what's in front of you. Keep your moving averages close. They are your friend. Next update will be Wednesday, the 16th.